my word, it is Red Dead Redemption out here, folks. The flapjacks are getting flipped all over the place. The problem is they're getting flipped on the floor right now. Woo! Man, do we have some things to go through in today's video, folks. We have stocks getting absolutely annihilated all over this market, okay? I want to give some perspective out there. I want to let you know why this matters in a significant way and what this means could transpire next for the market, because we are getting some very interesting telltale signs that we have gotten in the past, and I want to show you what happens to the market in a lot of large cap stocks following something like this happening that we're going to go through. So hope you guys enjoy this. I got a lot to go through, so I just want to get straight in this video. I appreciate everybody being subscribed, folks. Thanks so much for being here, and make sure you check out my free workshop when you're done today's video. You get free access to that with the pinned comment down there. You should enjoy that one, okay? So Palantir, right off the bat here, down around 9% again today. The stock's down 18% plus in the past 5 days. The stock's getting absolutely, annihilated, I guess, the way we could put it here in the short term, right? And, it's interesting. I made a statement, this was last week, and I said, Palantir matters significantly to the overall market, much more than a lot of people think. And some people laughed at me for that statement. Oh, Palantir doesn't matter. I'm like, you'd be surprised. Palantir is a huge psychological stock. A huge amount of the retail community owns Palantir or pays attention to Palantir. Even if they don't own it, they at least keep an eye on it, right? And when you see, and I said, if this stock reports, if the company reports a quarter that's just and that's kind of what happened there. They just reported inline numbers. I said, this is going to be devastating to a lot of these more risk-on type stocks. Now, if they come in reported great numbers, then we're flying and Palantir's moving, and all the risk-on stocks would take a next kind of level up there. But when Palantir just came in with inline numbers, with a guide that was just barely above kind of what Wall Street was expecting, that was like a huge deflation in the whole market in terms of all the risk-on related stocks. That was a huge letdown. That was like the air out of the balloon, just kind of like, oh, dang, okay. It's not as exciting as we hoped it was exciting, right? Things are just okay, or maybe a little better than okay. That's not the way these stocks have been pricing. And so here you have Palantir in a situation where obviously the stock's falling. A lot of people want to know kind of where's the bottom at for a stock like Palantir. Remember what I told you guys? I said if earnings were bad and the stock goes down, $15. I said $15. Said if earnings were pretty decent, which they weren't, as in like good, the stock was going to 20. The earnings weren't good. When you come in line, that's not good. They would have had to come in with a pretty nice revenue beat and EPS beat. They didn't come in with either. So if that was a situation where we were going to 20, if they came in and just beasted that quarter and came in with like an NVIDIA type quarter, right, where it's just shocking, like, oh my gosh, Palantir is going crazy, that was a $27 type move, right? And so unfortunately, we got the bad side, just inline numbers, inline kind of everything, and look at where we're at. And that's exactly where we're going to be, $15 here for a little bit. We'll kind of move around. And the good news is a lot of that Wall Street money is kind of selling now at this point in time. I think retail's taking those shares off of Wall Street's hands, and then we'll see kind of where things transpire. But it kind of played out exactly how I thought it was going to play out, given the scenario that happened, right? So that's what happened there with Palantir. Now, it's affecting a lot of other stocks. You look at a stock like Fubo. This stock is down another 7% here today. This lost a quarter of its value in the past 5 days. For what reason? None. The revenue growth was special, absolutely amazing. Revenue growth was special. The subscriber number was special. They're cutting down their losses in a meaningful way. They upped revenue guidance in terms of subscribers' revenue. So everything for Fubo is much better than it was 5 days ago, but yet the stock's been hit and lost a quarter of its value. And that's just the way these stocks kind of move around, man. Avant, another great example. They came in with an incredible quarter, one of the strongest revenue growth numbers you're going to see. They're getting this business close to flipping to profitability now at this point in time, and yet what's happened with the stock over the past 5 days? It's lost about a quarter of its value in the past 5 days. Just, stock's getting nuked. Speaking about getting nuked, look at Upstart. Oh my gosh, this is a 5 day of Upstart. The stock has lost almost half the company's value in the past 5 trading days. You got to be flipping my flapjacks. Upstart, I remember this stock because it was, one of those stocks. I think it was like a $300+ stock around like 2021. And I remember they had a guy on CNBC, and the guy that was interviewing him, basically said, I think it was Tyler Matheson or something like that. He's interviewing him, and he says, so what's the company do? And the guy, supposedly acts like you can't hear him anymore. Huh? What? It was always a famous CNBC clip I always remember. But nonetheless, folks, Upstart stock is getting absolutely wrecked. It lost almost half its value in 5 trading days. Okay, Roblox here today is down about 22%. The gaming giant, like, that's a massive move down, 22% in a day. Oh my goodness. Look at Lyft here today. Lyft is down almost 9% here today. And look at the price action. So strange. I mean, the stock tanks at the open, then it comes flying up, and then just tanks again. Like, the very strange price action. When you see stuff like that, you kind of question, like, what's going on here? Very, very strange, is I would say that. Rivian was one of the most shocking ones I saw here today. This stock's down over 7%. Now, why is this so shocking to me? The reason is, Rivian reported one of the most impressive quarters for a money-losing company I've seen in quite some time. Everything came in far better than expectations. Revenue side, delivery side, production side. Their profitability is, getting in a much, much better place in terms of cutting their losses down. Their guidance, their orders, their backlog, everything was really, really impressive. But yet that stock it can't find a bid because right now people don't want any of these riskier stocks, right? How long does this last? Well, we'll speak about that. But right now, it doesn't matter what you report for a quarter. It doesn't matter what an Avant reports for a quarter, or a Fubo, or a Rivian, or any of these stocks that are getting annihilated right now. If everybody says, I don't want any piece of risk right now for whatever reason, right? And we'll talk about those reasons in just a minute. It doesn't matter what you report in the short term. You're going down. And that's just unfortunately where we're at right now, right? If Wall Street wants to push down, if investors say, you know what, I want no piece of these stocks regardless, that's what's going to happen. It doesn't matter what you report for quarters. And I know it can be very demotivating as an individual stock picker, that sometimes you can have companies report much better than numbers than expected across the board, and yet your stock still sells off. But it is the market you get into when people want to go risk on, risk off sometimes, right? Look at this company, Super Microcomputer, down over 23% today. Just an absolutely massive move for that one, right? Bumble, the dating app, down over 7% here today. You look at a stock like IAC. If you don't know, they own many of the biggest websites in the world, literally. And this company makes significant money from basically like advertising, which is actually a market that's strengthening, if anything, based upon what I heard on Fubo's conference call for kind of what they're expecting the back half of this year for advertising, based upon what I heard from obviously Meta, the advertising giant. Advertising looks like it's going to be in a pretty good place, at least for the back half of this year. And so to see a company like IAC down 16% today, whoo, that's a heavy hit, okay? Now, why does all this matter? And I could have taken you through a million other stocks that are getting absolutely annihilated right today, down 5, 10, 15, 20%. Why does it matter all these stocks getting absolutely just pummeled, man? I mean, these stocks are just getting absolutely obliterated here over the past few trading days. The reason this matters so significantly is you're going to ask yourself, is this let's call it a multi-month event that's going to be happening, okay? Where these stocks, maybe flatten out for a little bit and then take another leg lower, and then flatten out and then take another leg lower, right? Come back a little bit and then another leg lower. And if that happens, that's something similar that we saw in actually 2021. If you weren't participating in the market in 2021, you probably didn't see this. But basically, in 2021, small cap stocks and many of the speculative stocks all peaked in the first half of 2021. And then they started to experience damage in the second half of 2021. Now, meanwhile, big, large cap stocks, big tech, those sorts of stocks, they were not experiencing any damage in the second half of the year up until the very, very end of 2021, essentially. But for the most part, those stocks were good. So as somebody that owned several speculative stocks at that time and several small caps, I was experiencing pain in the back half of 2021 before most market participants really noticed the pain, right? And then what ended up transpiring was very, very interesting. This is why it's very, very scary for everybody and why everybody needs to be paying attention to all these sorts of stocks. Because then what that bled into is the entire market drop. And by the time you got to 2022, the whole market was dropping. Like obviously, if you experienced the market in 2022, you know what it was, right? We're talking about a NASDAQ that went 37% peak to trough down, right? Huge moves. The SP 500 was a 20% plus move, peak to trough down. It was violent. It was nasty. Many of the biggest big tech stocks out there were down 50, 60, 70% peak to trough, right? 80%. Companies like Tesla, Shopify, Netflix, Amazon. Like, you can go through the list. I mean, it was ridiculous. Even some big dog stocks went down 25, 35%, peak to trough. Companies like Google, McDougal, Apple, Microsoft, some of those guys, right? Painful. Stocks like NVIDIA, AMD got slashed well over 50%, if not 60%, right? So it was pain. It was Red Dead Redemption all over the market. And so that's why, even if you don't own many of these more speculative stocks, smaller cap stocks in general, they're very worth paying attention to, because many times those stocks can lead you out of a market problem and they can lead you into a market problem, okay? And many of these stocks started to come back very nicely in the first several months of 2022, right? And they started kind of going some very, very nice runs. And many of these stocks that are seen as more speculative appreciate 100%, 200% in a matter of months, right? And they were just part of that kind of coming out of that bear market of 2022, right? And now all of a sudden you're starting to see many of these stocks weaken considerably, and you've got to keep an eye on it, because if this is a trend that's going to last several months, it's ultimately telling you that get ready, big dogs are falling next. Okay, this is the way this process plays out. You usually have a little bit of time in between when small start to get hit before the bigs get hit, but it is definitely a scary thing in general, right? And you look at the bigs here today, the bigs aren't getting hit. You got all these more speculative stocks, more small cap stocks getting annihilated today, and yet, just like you saw in the second half of 2021, bigs are doing okay. Apple's hardly down today. Google, McDougal's hardly down. Microsoft's hardly down. It's like they don't even notice what's going on, right? But I can tell you, if this is a trend, these ones will end up noticing, and they're going to notice heavy. And that's when everybody, does the stuff in the bed, as they say, okay? So that matters significantly. Now, as far as what's about to happen here, right? CPI is about to come out. CPI comes out literally tomorrow. Now, this is the most meaningful thing to the stock market in the short term, okay? Up until we get to NVIDIA earnings, which is in about 2 weeks from now, NVIDIA earnings are, okay? This is the most meaningful thing. And, CPI should come in pretty good. We should probably come in high twos, 2.7, 2.8, 2.9. It's just a big question of which one of those is it. It'd be extremely surprising and disappointing if we came in anything with a 3 in front of it. That'd be very bearish, very, very bearish. If we come in with something with a 3, we should come in something high twos. And so that's going to be a big moment for the market, because once you hit a 2 for CPI, right, something in the 2s, you're close to where the Fed wants us. The Fed wants us at 2%, right? So that would be a big moment for the stock market. But we're not out of the woods, and the bears aren't going to let us off yet, okay? Because even if we come in, let's say tomorrow CPI comes in at 2.8. You know what the bears are going to say? I'm going to tell you exactly what the bears are going to say. The bears are going to say, enjoy this for the next month or two. At the end of this year and going into 2024, we're going right back up to the 3s and 4s. So enjoy this little 2s while it lasts. We're going right back up to the 3s and 4s. Fed's going to have to continue to have rates in a higher place for a longer time, which is going to be even more devastating to the economy, which will be even more devastating to company earnings, which puts us at a much bigger recession risk, right? And that's exactly where the bears are going to take this. So it doesn't matter where CPI really is tomorrow. It could be 2.5 tomorrow, and the bears are still going to say, enjoy it now, it's coming back. This baby's going to come back, okay? We're going to be 3s, 4s. And to give them some credit to that, when you see what's going on with GSG, there is a little truth to what they're saying. It doesn't mean it's a for sure thing, but I got to say, commodities is getting a little scary. The move we've had since the end of June has been pretty violent up, okay? And so commodities index is up about 9% so far year to date. But this move specifically since the end of June is very troublesome. Very, very troublesome. I mean, we're up in pretty much a straight line. If this continues on, then we could be potentially talking about, damn it, maybe inflation does stay higher for longer and we're in 3s and 4s, and the Fed has to keep Fed funds rate at 5 something for many, many months to go in the future. And the longer, like I said, they keep those rates high, the higher probability we have of something breaking, the economy breaking, and things kind of getting ugly there, okay? And so this is a serious risk that we got to keep an eye on. Ultimately, it would be great if GSG started to come down over the next few months, because that would take away some of this scariness risk of like inflation, CPI staying higher for longer, right? So we'll see how this transpires, but this matters in a meaningful way. I was looking up a few things on CNBC, and I saw this. At 101 years old, I'm the world's oldest practicing doctor. I'm like, can you imagine this is your doctor? He's 101 years old. Holy smokers, that's no jokers, man. Imagine you need surgery. He's like, yeah, I'm going to perform surgery on you. And you're like, okay, you're going to give me anesthesia, right? He's like, no, I don't do anesthesia. You get a towel in your mouth to do this surgery. And he's like, I need to take a nap halfway through your surgery. Like, what in the world? 101 years old, being a doctor still? That's like crazy. Now, I wrote this for the private group last night, very late last night. I said, I got to say I love the financial markets right now. There are many stocks that are at very attractive valuations currently, some insane risk-reward profiles that skew heavy toward reward. There are some attractive hedge opportunities for the next 12 to 15 months. They're all over the place, portfolio protection. Cash actually generates sweet returns while you are holding it for a rainy day or for protection. 4 to 5% is common, right? You can get that through savings account, treasuries, things like that. Best return on cash since I was a little kid, my children's age. These financial markets are giving us many opportunities in many areas. To me, this is excellent. Have a great night. And so, in my opinion, it's actually a very great time to be in the financial markets. Because many times the financial markets are pushing you to something. It either wants you to short stocks, buy puts, because everything's just getting bad, or it's trying to force you into buying, let's say, just growth stocks because you're in a period of economic expansion, and let's say interest rates are near zero and you can't make anything substantial on treasuries or savings accounts, things like that. Then it kind of pushes you into growth stocks, and it's either this or nothing, right? Which kind of felt like where we were at in 2021, because we were in an economic expansion. Inflation was starting to spike up, and it's like, where do you put money? And at that moment, it kind of forced a lot of people into like growth stocks and those sorts of things, right? Right now, there's so many opportunities. There's several stocks that are just very cheap valuations where the risk-reward profiles for the next 2 to 3 years is just phenomenal. Then you've got this dynamic where many of these large cap stocks are trading at extremely rich valuations that makes them pretty easy hedges. So in case this market tanks at all over the next year, you got some very nice protection there, and you'll make some huge money on the downside. And meanwhile, for a rainy day or for protection, if you want to just keep some cash around, you can actually generate a decent return on that cash, which is very rare for us for the past 20 years. You haven't been able to get crap. The fact that you can get 4 to 5% in a savings account right now that's amazing, right? And by the way, you can't get that from those big traditional huge banks. You usually have to get it from more like online related banks, right? SoFi has pretty attractive rates. Ally Bank has pretty attractive rates. There's a few other players out there that certainly, you can look into that provide you some, 4 to 5% type savings account rates right now, which is phenomenal. And usually you just don't have those capabilities. So right now, I think it's one of the best times to be in the financial market I've ever seen, given how many different options you have at your disposal. And for me personally, I'm doing kind of a combo of everything, right? I'm adding hedges right now. I'm buying stocks every week, and I'm cashing over on the sideline, right? And that cash is generating me returns. If you have $100,000 in a savings account right now at 4.5%, you're making $4,500 a year just in guaranteed risk-free money right now. Think about that for a moment, right? If you have $1 million in cash, I know not everybody has $1 million in cash, right? You got $1 million in cash right now. You're making $40,000 plus a year for doing nothing but keeping your money in savings accounts right now. Think about that for a moment, right? And you can split that between 4 different financial institutions if you want, and you get your 4% plus on all 4 of them, so you're guaranteed that $250 if something went down with those banks, right? Like, my gosh, what an attractive time, to be in the financial markets. It really presents so many opportunities on so many different fronts, and usually you don't have that. And so I think it's one of the time periods you got to be very sophisticated. I don't think it's one of those time periods you want to be all in the market long. I also don't think it's one of those time periods you want to be all in the market short. And I also don't think it's one of those time periods you want to be all in cash right now. I think you really got to have a combo plan, which is more sophisticated than an average market. I can tell you that, but I love it, man. I love this setup. And as somebody that, plays this game on the highest level possible, man, I freaking love this. I love this. Not everybody's going to like this game. The masses aren't going to like this game right now. But I'm telling you, if you're really into the financial markets, like, this is such a freaking beautiful time for you to be an investor in this market. It's ridiculous, right? Now, looking at the public count, right? The public count has lost over $100,000 of value in the past about month or so, right? Well over $100,000 in a month. We're at about 1.74 million right now. We're at 1.8 plus, back at the beginning of July, right? So that's a lot of value to lose in a pretty short amount of time, right? And, today, a day like today, down $37,000 in the public account, right? It's very common for my net worth to move around, $100,000 on a day, right? 6 figures in a day. And just as easy as that $37,000 losses in the public account today, tomorrow could be up $37,000, right? And a lot of people don't understand how to process that, right? The variance of your net worth moving around, 6 figures in a day between everything, right? And I'll put it to you like this. If you are somebody that gets started young and with smaller amounts of money, it is so much easier mentally to build up to a place where you don't even really think about it in terms of that variance of money. So if you haven't got to those sorts of levels, you look around and you're like, oh my gosh, that's so crazy. Like, how could you, up and down and all around and all these, huge amounts and sums of money that are moving around, right? It's the same thing as when I was, a youngin' investing my first few $100, right? This was my first time I ever went to Vegas. This was in 2009 with my brother, right? They were still building City Center back in those days at that particular time, right? And, my net worth might have been $1,000, maybe less than $1,000. So at that given moment, for instance, right? If I, each day my net worth probably moved around $10, $20, maybe $30. My net worth's moving around, right? Which is a big variance. It doesn't sound like a big number, but as a percent, it was a huge number for me at that time, right? Heck, if my net worth's moving around $10, $20, $30, if I just go out to dinner one time at a restaurant and spend $20 on myself, $10 on myself, that's a big variance, right? So when you build up from the small amounts, this is why it's so important to get started investing as young as possible. So there's going to be a moment when it's like $10 to $20, $30 is your big variance, right? And then you start building up. And I still remember when, my net worth would move around $100 in a day. Wow. Oh my gosh. I still remember when my net worth started moving around $1,000 in a day. I remember when my net worth started moving around $10,000 a day. And now 6 figures a day. Someday it's going to be 7 figures a day. Someday it's going to be 8 figures a day. And someday it's going to be 9 and 10 figures a day. My net worth will be moving in a day. In a day. When you just build up the ranks and you keep building and building and building, you don't even think about it. It's just part of the process. The issue is usually what I find when people have trouble with variance, it's people that maybe saved their whole life, right? They didn't really invest money. Then they wait till their 40s and 50s, try to get in the financial markets when they already saved a lot of money. And then they start experiencing the variance. If you haven't gone up the ranks, it's like a whole different world for you. It's the same. It's the equivalent of, let's say, I don't know how many people watch sports that are watching this video. Let's say you watch football. Or let's say you watch basketball, right? It's equivalent of just throwing some random 40-year-old guy into an NBA game and saying, good luck against LeBron tonight, okay? Or throwing him in an NFL game and saying, good luck tackling Derrick Henry today. Have fun with that, okay? Or good luck racing Usain Bolt or whatever it is, right? Good luck in this tennis match against, Serena Williams. Good luck to you, okay? If you're in your 40s or 50s or whatever and you just get thrown into that, oh my gosh, you're so out of sorts, you haven't experienced it. However, the person that has gone up the ranks and they played as a kid, right? And they got better and better and they were one of the best as a kid. And then they grew into a teenager and they become one of the best when they were teenagers. And then they went to the next ranks and they were one of the best in college. And then in the pros, they're not thrown off by the variance and what they have to deal with there. But if you're just, thrown in there, you go straight to the pros when you haven't even gone through the ranks, you're going to be so out of sorts and it's going to make it go crazy. Like, oh my gosh, my money, it's moving around so much, I'm losing. For me, it's nothing. 2022 was vicious to me. It was just another year. 2022 was the worst year for me ever financially. And at the end of the day, it wasn't even that much. It wasn't even much for me to take mentally. Truthfully. It wasn't even that much for me to take mentally. I had to shut down my Hungry Bull app that year. Lost a ton on stocks. It was vicious, man. I had to let go, several people that worked for me under the Hungry Bull project and all that stuff, right? At the end of the day, it was just another year. It was a vicious year, but it was just another year because I'm used to the roller coaster ride of the financial markets, right? And sometimes it's absolutely phenomenal. And you're making so much money, you're like, I don't know where to put all this damn money. There's too much. And there's other time periods when it's vicious on the other side. If you've graduated up the ranks, this doesn't faze you. You're not bothered by this. It just is what it is, right? Just as easy as you can make money. It's actually a lot easier to make money in this world than lose money in this world. I can tell you that. You're going to go through some time periods when you lose some money in the financial game, but it's a lot easier to gain it on the other side, right? I mean, think about it this way. This is a math that a lot of people don't understand. I don't want to say a lot of people, but a portion of people don't understand this math. You put money in stock A, stock B. Stock A goes to zero. You lost 100% of your money. Stock B, you make 1,000% on that. Put equal amount into those stocks. Tell me, where your numbers are at. That's the part of investing that a lot of people don't understand. Even if worst case scenario happens and your stock goes to zero, there's so many game-changing stock opportunities out there that can gain you 200%, 500%, 1,000%, 2,000%, 5,000%. It's not like there's just a few stocks that have ever done that. There's you know how many stocks I personally own that have 10x, 30x, whatever, over the years, and just my last 15 years of being in the market? It's a long freaking list. And so, just look at the public account alone. I got Tesla in there, that's a 10x. I got Elf in there, that's a 16x or whatever. Like, it's just ridiculous. Even in the dividend account, I got a stock Tapestry, sleepy old Tapestry. That's sitting on a 200% plus gain. I mean, Tapestry, like, you're going to be flipping my flapjacks. Meta's going to be a multi-100% gainer, if not a 10x long term. So, you look at these Palantir, like, that's got huge upside potential. That could be, easily a 3x, 5x, if not a 10x, if they really execute over the next 5, 10 years. There's a long list of companies out there that you can make insane sums of money, right? And so even if you have those screw-ups, like, just understand there's so many other stocks, as long as you're diversified. The issue some people get into is they put all their money, all their eggs in one basket. You do that, you're a clown. Like, that's just a horrible move. Like, no, okay? Even if it works out, no, that's still not a smart move. As long as you're diversified, that's what gets me through the bear markets is my diversification. Because even in a bear market, I'm still making a ton of dividend money. And some of my stocks are going to do just fine in even a bear market scenario, which is obviously what played out last year, right? Other my stocks are going to get hit super hard. But guess what? Those same stocks that get hit super hard in a bear type market are the same stocks that when you go into a bull market are up 50%, 100%, 200%, 300% quickly. Exactly what we've seen play out this year, right? So let that kind of be a little food for thought out there, folks. I appreciate everybody joining me as always. Thanks so much, folks. I'm loving these financial markets right now. It should be a fun next bit of time. Thanks for being subscribed. Make sure you get my free workshop down there. It's about a 30-minute video. It's absolutely free to access that, how I find 10x stocks. Should get a lot of value out of that. It's pinned comment. Much love and have a great day.